Does that get pulled back if the economy softens this year, given the macroeconomic backdrop?
Yeah, well, I appreciate the question. I mean, we're trying to build the largest local commerce company in the world, and so there's a lot to do there. I mean, we're trying to bring everything inside the neighborhood to you and bring incremental demand to all these physical businesses. On the other hand, we're trying to convert all these physical businesses and give them the tools to become digital powerhouses. What we've seen so far is we've been very resilient and fortunate as a business to have a very profitable core U.S. restaurants business that has given us the fuel and positive cash flows to be able to reinvest, to go beyond restaurants, beyond the United States, and beyond just our marketplace, but also build a platform for local commerce globally.
Yeah, so I know that your free cash flow being positive is sort of a key point here, but it feels like what investors are saying right now amid this macroeconomic backdrop is they don't want company CEOs to build. They want them almost to preserve cash, preserve profits, get closer to it on a net income level, not just adjusted EBITDA. So does that make you reconsider your plans at all if we're heading into a year where that sort of desire from investors could be even more pronounced?
Well, the goal for DoorDash is to maximize total profit dollars over the long run. We think that's not only great for the interest of all of our audiences, but also the best for shareholders. And I think while that may take, some resilience and patience through, certainly this period of volatility, a lot of external factors, I mean, what we see internally and in the fundamentals is all-time highs in our user base, all-time highs in our DashPass subscriber program, as well as order frequency across all cohorts, as well as increasing profitability in an already profitable business, which is our U.S. restaurants business. And so when I combine these factors, right now is the time to invest for the future at DoorDash.
So what I'm hearing is that your strategy will not change given the macroeconomic backdrop, but in the long term, you're still hoping and looking for that to pay off. In terms of your driver supply, it's so curious to me why you guys have not had the same issues as Uber and Lyft. I'm not just talking about this year, but post-pandemic last year when the ride-sharing companies were spending so much money to get drivers onto their platform. CEO Dara Khosrowshahi, he said again this week that cross-selling on its platform between Eats and Rides has been a big boost in terms of that metric, active drivers. Is that true? Do you guys need a ride-sharing business?
Well, we actually don't see any connection between delivering goods and delivering people. And structurally, we actually, have seen that we have a much larger pool of workers who are interested in delivering goods. In fact, we have more Dashers, these folks who are doing the deliveries, than even folks in ride sharing with drivers. And as a result of that, that's really because of just structural differences. People who don't want to have people inside the same vehicle, people who really care about their safety, people who don't see it as a full-time opportunity. Again, 90% of the Dashers on DoorDash do fewer than 10 hours of work. The average Dasher does a week. The average Dasher does 4 hours a week. So when you think about it, from that perspective, we represent hundreds of industries, people who, can be everything from U.S. Olympians to retail workers to students. They're all dashing. As a result, we just have a structurally fundamental advantage over any other form of part-time work.
John's got a question for you.
Hey, Tony, good morning. And I'll mention,
hey, John.
As we're talking, DoorDash stock kind of tipping into the green a bit. I want to ask you about inflation through the lens of DoorDash, but on a couple of areas in particular. One is DashPass, because you've got some subscription providers like a Netflix and others leaning more into advertising because they believe that consumers might be subscription sensitive. I wonder how that plays out with DashPass. And then your retooled pricing for restaurants, which you did during the pandemic, where now it's a little bit more a la carte. Restaurants can choose how much they want you for marketing versus how much for delivery. How is all that playing out? Are you finding that more DoorDash customers are using you to order from restaurants and go pick it up themselves? And how does that affect your growth, your margins, your profitability?
Yeah, well, inflation is certainly a very real issue that we take very seriously. We've been looking at it, actually many years ago, kind of seen some of the uptick in consumer prices rising. And, for us, it's always been about making sure all of our audiences are taken care of, and that really starts in this case with the Dashers, making sure that they get 10% cash back on fuel expenses, that Dashers who are driving longer distances actually get bonuses for that work. For merchants, to your point, giving them a suite of tools to pick and choose, is this now a time to invest to offset some of the rising costs and some of the challenges? Or, for others who maybe are seeing some labor pressures and other forms of, struggle on the supply front, is it an opportunity to do things like pickup or other forms of business, and just giving them the tools to choose between the spectrum of growth and profitability. And all of this is on the backdrop of the fact that we've seen very strong resilience from consumer demand, even in the face of some of this inflationary pressure. And I think that's because we have the greatest privilege of serving a business where people eat 3 times a day, and that's 90 times a month. And when you have that many shots on goal, and when you think about where consumers are going to spend, even in spite of inflationary pressures, food consumption is certainly at the top of the list.
Tony, can you give me a little bit of data on the degree to which DoorDash is enabling transformation in restaurant business models? You and I have talked in the past about restaurants trialing different concepts out of the same kitchen and thus able to grow that way. You guys have started doing more distance delivery of letting people, say, order from a great barbecue place in Memphis and have the frozen food shipped to them. To what degree is that working? To what degree is that profitable for the businesses involved? And do you view that as a driver going forward?
We want to be the first place where a restaurant or any physical business, we want to be their first phone call as their business partner. And that's why we're inventing so many products to allow them to find ways to grow and reach new customers and new ordering occasions. And you highlighted a couple of them. During the pandemic, we saw restaurants get very inventive and creative, selling different types of food from the same kitchen. A Chinese restaurant selling now Mexican food and many versions of this. In fact, we've seen tens of thousands of these types of opportunities, these virtual brands and stores rise on the platform literally from zero just a couple of years ago. We also saw new innovation, where restaurants are now shipping some of their foods, whether it's frozen foods from places like Lou Malnati's and their great, delicious deep dish pizza in Chicago, to Carlos Bakery, and their amazingly delicious cookies. To other restaurants who are now recognizing they're not just a place that sells food, but a place that sells merchandise. And so, they're selling their cookbooks, they're selling their stories, they're selling cooking classes. All of these things really are part of the new suite in building a digital business.
Hey, Tony, retail gasoline up 22 cents in 3 weeks. Diesel all-time high, $5.50. I just wonder how you think about fuel surcharges and how broadly you're deploying them, if at all, and what the line is to pull them back if we, in fact, do get some relief down the road.
Yeah, it's a great question. I mean, looking at the rising cost of fuel is something that, we've been studying literally for the past, 4 to 6 quarters now. And that's why we introduced the Gas Rewards program to Dashers, to make sure that their earnings wouldn't be impacted by this rising cost in fuel. And we've extended that program through the end of August now. We weren't seeing, actually, we didn't even, prior to the increases in fuel costs that you've been describing, we actually didn't see any challenges in getting Dashers on the road. In fact, we had, record highs in terms of Dashers on the platform. But it's the right thing to do. We wanted to make sure that their earnings weren't impacted, and we're fortunate as a business to have those profits to be able to reinvest back into the drivers without passing on the cost to consumers.
Tony, I wish we had more time, but that's all we got. I didn't even get to ask you about DashMart. We'll do that next time. Thank you so much for being with us.
Thanks so much, Deirdre.